So Terry During is a principal at Sullivan During Accounting at Business Builders at Caringbah. Will start off proceedings and talking about his tips and tricks with small business. Thanks, Terry.
Thanks, David. Thank you. Morning, everyone. David, thank you for not referring to us as some old members. That was quite polite, politically correct. My topic was originally 10 tips to becoming financially well organised, which is a 2-hour presentation. So I've pruned it down and you're going to miss a couple of the tips. So I'm going to go through 5 or 6 tips to becoming financially well organised in your business. The first thing is it's really begin with the end in mind. What's the right structure you should set your business up? Are you a partnership? Should you be a company? Should you be a trust? I often see just some very complicated structures and I go, why do you have this? Other than the fact that it was sold to them as being a good idea. So you need to understand and align your structure of the business to satisfy your business long-term goals. Provide a solid platform for you to grow, and also make sure you can do some really good profit planning and dividend planning. On a tax-effective basis, if you plan to get dividends out as a franked dividend, having a company, for example, in place is a good structure. But in some cases, a trust is a very good structure. So that's something you just need to think about before you start your business. But as a starting point, if it's really simple and you don't have sufficient funds, you just kick off as a sole trader, as a partnership. But bear in mind that you need to be able to protect your assets. So just be careful of that and look at the industry that you're in. So that's the first tip, get your structure right in your business. The second one is plan to achieve the best profit that you can. Now, I've heard the term and I use it, sales is for dream, profit is for keeps. And too many times you talk to a business owner and you say, how's business going? And they tell you how their sales are going, which is not really what I want to know. What I want to know is really, how's your profit going? But you don't say that because you need to make sure you're making profitable sales, not just sales for any sake. And I was talking to a client yesterday, on Monday, he was telling me that some of the sales now at the marginal end of his business, he's got quite a substantial business, he's not making any margin on them and he's spinning his wheels. I said, get rid of them. Scale your business back, drop a few $1 million in revenue, take some pressure off your business. So make sure that you have your profit plan in place. So the very first thing, plan to achieve the best profit, is to prepare a profit plan for your business. So what that means is decide how much profit you want to make in your business, know what your expenses and build your profit plan up to a gross sales basis. It's something that's really simple to do. We don't use any complicated spreadsheet software, we just use it on Excel. And our clients understand that process with the bottom-up approach. Can I ask, does anyone in their business here actually prepare a profit plan or a cash flow plan? Good to see a few hands going up. Darren, those people that don't prepare a profit plan, what happens to their business?
It's another 4-letter word, Terry.
Darren's the person you don't want to ever meet. So, sorry, mate. He's a good guy. And in that profit plan, you plan for dividends that you want to take out of the company or out of the business, and you plan for payments of tax, and you also plan for the lumpy payments like GST, which is mostly, for most businesses, paid on a quarterly basis. So in the profit plan, you actually do a conversion across to a cash flow plan for your business. And then one of the other key issues is make sure you compare any profit as per your profit plan to your actual results. It's no good having a plan if you don't compare it to where you're really currently trading. And just remember, profit is a good word because it gives you options. You want to run a successful, profitable business that's paying tax that you can plan for your future with. Third tip is know your numbers. If you ask any successful business person what's the most important thing in their business, and all the accountants in the room, if you was to know that he would say, know your numbers. A real estate colleague of mine, I asked him, I said, what's the most important thing in your business? And I'm thinking he's going to rattle all these things off. He said, I just want to know how many listings I've got. Because he knows from being in business for so many years that X percentage of those listings will convert into sales. Now that may not have been applicable last year, but this year it certainly is applicable, and the biggest issue they've got is stock numbers. So know your numbers, and I can't tell you what the numbers are, but these are the numbers that you know are the critical numbers to the success of your business. But the sorts of things we measure in our key performance indicator analysis with our clients on a monthly or quarterly basis are are things like sales, and I go back now to sales compared to plan, gross profit margins, net profit margins. They're important to understand those, and some people don't know the difference, so you need to get an understanding of those. And you also measure non-financial numbers, so such as how many new customers you've got, where do they come from, what's the average value of a sale, for example, in a retail environment. You need to understand like what your average value of the sale is, because if you can increase the average value of the sale, you can increase the profit in your business, you can increase the turnover. So even quote conversion rates. I had to say to a client one year, how many quotes you got out there? And he said, I've got 100. I said, well, how many have accepted? He said, I'm still waiting. I said, well, why don't you stop quoting and start chasing up on these quotes? So understand what your conversion rate of quotes is and really work on it to convert them into sales, into revenue. I don't know about the customer complaints, you shouldn't have any of those, but that's like, I suppose the banks might know that one, sorry guys. Really important, pay yourself. In business, people, some small businesses don't pay themselves. You go, how do you survive? Because you come back to plan number 2 is run a profitable business. Outcome of that profitable business is to pay yourself. You need to then plan on how you're going to pay yourself. Again, whether it's going to be salary, whether it's going to be a trust distribution, whether it's going to be a franked dividend. And these are the sorts of things your accountant works closely with you to determine what's the best way to get the money out of the business. The objective is not to leave the money in the business, okay? You want to make the profit, pay yourself, and get it out. And as part of getting out is to build wealth, and build it strategically through supporting superannuation or other investments. So it's just not, if you leave the money in the company, of course, the company becomes lazy. If you have a lazy balance sheet with money just sitting in the bank, you don't chase your debtors up as much. You maybe pay your creditors too early, or you might even get sloppy in monitoring what your margins are. So pay yourself, get the money out, invest it wisely. Number 5, what am I up to? 5, structure your debt correctly. So the bankers were all like this one, but for those that don't know, the principle is really get rid of your non-deductible debt. Now, easy. That was easy to do, wasn't it? I just said get rid of it. Because we all have home loans, we all know that that's we can't do anything about that, but the aim is to reduce that non-deductible debt first. So if you're building wealth through borrowing to buy assets, and you've also got your housing loan in place, you want to knock the housing loan off as quick as possible, and therefore we suggest that the housing loan should be principal and interest. You don't want to be one of those people that retire who's still got a housing loan debt, and unfortunately in Australia there's probably far too many of those, and David, you probably know better than me on that, but we do see that people retire and go, you've got a debt on your house? What are you going to do? You're going to have to downsize. And that may have been their plan, so that's okay. If you had a grand idea of a big house and then when you get to the end you're going to flog it and move into a 2-bedroom unit, that's fine. So the principle is deductible debt should be interest only, whilst you've got a non-deductible debt which you want to knock off. So that was my 5 tips, and I don't know whether I'm with him on 15 minutes that David allotted me, but so I'm giving you 6, my bonus tips. So the 10 tips are actually in your handout there. It's in the folder on your table, and you can even do a test on it, and some other things I haven't touched on, of course. But the bonus tip is to create wealth. So to create wealth, because that's what we're here for. I think we are, unless you're running a charity. But create wealth. You need, on the right-hand side, you need income. So whether that income come from having a job, a good, well-paying job, or a business, it doesn't matter. It's about getting the money to flow in, and then supporting super. Now, that's harder these days. It's 9.5% compulsory super, but on top of that, the maximum that can go into super is $25,000, which is a far cry from 5 years ago when you put 100,000 in, because that was a great strategy for successful businesses to whack money into super. So I just don't understand the government's long-term thinking of this to cap the $25,000 going in, because that's not going to give you enough for when you retire. Also, then buy shares and property. So start creating wealth. And different people are different. Some love the share market, some hate the share market. Some love property, some hate property. Or there's a composite of shares and property. And also you can consider buying property in a self-managed super fund. You can borrow to buy property in a self-managed super fund. It's not easy, but it can be done. We have a lot of our small business clients own their factories in the self-managed super fund. So they've become their own tenant, and that's, rather than paying some landlord money, they pay it to themselves and pay the bank back and grow wealth that way. With the aim of when they retire, they've got a nice income stream from that property. And of course, own your own home when you retire. So that's my bonus tip for creating wealth. That's all my tips for becoming financially well organised. And if anyone's got a question, I'm happy to take it, or take it later, David, on a panel. On the panel. Okay. Thanks for listening. Thank you.